For more on this, we're joined by Vicky Pryce, Chief Economic Advisor at the Centre for Economics and Business Research. Welcome back to the programme, Vicky. Now, inflation has eased to the ECB's 2% target, but prices remain high. How are consumers coping with the strain of disinflation?
Well, first of all, I mean, lots of consumers are still facing inflation because in some aspects of what it is that they're spending, they're seeing still prices going up. But of course, more generally, what they are enjoying is the fact that energy prices have been falling recently, and that, of course, has been quite significant for households. But also, there are some categories of food which have gone the right direction. But overall, I think the interesting thing about the EU and the Eurozone is that they seem to be managing, despite discrepancies that exist across the various countries, because obviously when you look at, France is quite sort of different to what happens elsewhere in the EU, which France has had quite low inflation, about 1.6%. What you find is that they have managed with despite the fact that they've cut interest rates quite significantly, to keep that inflation under control and to meet the target, which is a lot more that can be said for the US and, of course, for the UK.
Right, and with services inflation still stuck at around 3.5%, would rising wages spark a second wave of inflation across the EU, the Eurozone?
Well, it could. I mean, the interesting thing is if you look at what's been happening to services output itself, the latest PMI data, which is the Purchasing Managers Index for December, suggests that, yes, there's growth, and this growth has continued. So it's above 50, which is, the sign of whether you're in contraction or expansion, but actually slowed down a little bit from the previous month. So we've seen the consumer being a little bit more careful. And of course, if wages do indeed pick up, and there are some countries which are now beginning to look at it quite seriously, for example, Greece, which is looking once again at possibly starting collective bargaining, and therefore wages might indeed start going up, particularly now that unemployment has stayed quite low. What you can indeed see is that perhaps that's what the ECB is worried about, that wages might indeed start fueling inflation, because despite that slowdown that I mentioned, there's still quite a lot of demand out there. Now, if you ask consumers, they're not particularly confident about the future, but nevertheless, they seem to now be seeing some increases in real disposable income.
In the meantime, we're seeing banks slashing mortgage rates. Is this the spark that finally wakes up Europe's housing market?
Well, yes, I think if you look at what's been going on in terms of lending, there is still concern that not enough lending is going to businesses, but certainly there is competition increasing in terms of ensuring that the mortgage rates that are out there are going to lure customers, and the housing market might indeed see some interesting results coming out of that. Of course, what the ECB will be doing is looking at it very carefully, because they have their meeting in early February. The expectation, just as you were saying earlier, had been that perhaps we're not going to see any further cuts, that in fact, if anything, the next move may be up. And that's why we're talking now about the concerns that there might be for the future. Nevertheless, the markets are now adjusting. The fact that inflation seems to stay quite low suggests that, particularly if the economy maybe doesn't do as well as the ECB is forecasting right now, we might see some more cuts in interest rates coming. A bit unlikely in the short term, maybe mid-year, depending on how the economy does.
Vicky Pryce in London, thank you very much for your insights.